Welcome, investors, and thanks for joining us on Your Investment Advisor, where we decipher the markets so you can take actionable investment steps. Joining me today, Michael Monteclaro from Klein and Hutchins, our commercial real estate expert. He joins us again. So welcome back, Michael. It's been a couple months.
It has been a while. Thank you for having me again.
I appreciate it. Yeah, a lot's changed in the markets since we last met. The pessimism around our last time, I mean, the stock market was down nearly 20%. Everyone was anticipating that we're in a recession, going into a recession. The real estate market has loosened up quite a bit because of the interest rates for being so
Absolutely,
high.
100%.
Nationwide. Now, how's the Tampa Bay commercial real estate market? How has it been transitioning from the last time we met, which is at the end of the year, till now?
You know, the market right now is on a decline. I would hate to say it, but it really is. People are not investing as much in commercial properties.
Okay.
Across the board. The products that are online have been sold, but now there are products that are coming online, albeit slowly. They are not selling as fast. A lot of people, investors, are sitting on the sidelines with a lot of cash, basically. And that's only due because of the interest rates for lending.
So you think it's just the interest rates that are causing this decline in the housing market? Is it more inventory, or just you just see on the interest rates? I mean, has there been? I know single-family houses. I know a lot of inventory has been coming in the residential market, based on the data that's been released of new homes available. Does that figure that I read? Is that part of commercial real estate? Is there a lot more inventory coming in that direction as well?
There is, yeah, I would say it is, but not as much as residential. Residential has been hit pretty hard.
Yeah.
Not like the commercial. Commercial has been pretty much steady, but it's on a decline right now. So we're seeing a lot of properties. You know, they come online, but it takes some time. Like I said, there's a lot of money sitting on the sidelines. People are being hesitant. They think that a big recession is coming, when in fact I believe we're already in it, and it's just going to level out for a little bit more, flatten out, and pick back up.
Interesting.
Yeah.
Okay, so you think we're already in a recession right now?
I believe so. Again, I'm not a financial analyst like you are,
Okay.
but I think we are. I think that it's going to be a little bit more of a decline in the pricing.
Well, here's you never know if you're in a recession until after it's
After
after
yeah,
the fact.
2020.
Yeah, and it's done. You will look back on it 6 months later, like, oh yeah, that was, we were in a recession at that time. So I mean, you absolutely could be right on that. I'm not going to take one side of that or the other, because we won't know until after the fact.
After
but
the fact, yeah.
that's your feeling that we're in a recession right now. And okay, so interest rates are high. We have inventory coming on. That's what's bringing down prices. What do you foresee for 2023 then, given that we're 2 months in? We had a bear market in stocks in 2022, right? And 2023, we've had a great January. Stock market rallied nearly 7-8%. So goes January, so goes the year. But the stock market and the real estate market are on different timelines, different parts of the business cycle. So, what do you think 2023 is going to bring for commercial real estate?
Well, according to analysts in the commercial real estate market, they are thinking that things are going to start picking up at the end of the year. More rents will be had by landlords.
Yes.
And I think commercial loans will also start picking up, because right now commercial loans are kind of, I wouldn't say hard to be had, but they are not as lending like they used to before. I was talking to a commercial banker the other day, and he said that he's seeing rates at around 7% on average for a commercial loan. So it's stable. I wouldn't say stabilizing, but it's actually pre-pandemic. We're looking at rates that are 2019. So this is actually normal.
Okay. Before they took the Fed funds rate to zero.
Yeah,
in
exactly.
2020.
Yeah.
So we're back to kind of where we're at, but prices went up significantly since then.
Prices, yeah.
So that's the conundrum then. But there's also a much larger money supply. I mean, the federal government put 80% of the money supply in 2020, 2021. So I mean, from what we're seeing in the bond market, and the bond market kind of leads all assets and is the leader of most assets classes, and sometimes it's wrong, but most of the time it's right. From what we're seeing is rates looking to kind of level off. You know, we're near where the height is going to be based on the FOMC minutes yesterday, based on the last Fed meetings. Their most hawkish member of the FOMC committee. He's not a voting member, but he was extremely right from 2021, 2022 of where monetary policy needed to go. That's James Bullard. But he's not a voting member anymore. He was then. Even he came out yesterday and was saying how we're not quite there yet, but we're significantly close to where they want to bring the Fed's terminal rate. And given that, if rates level out, do you think commercial real estate prices are going to keep coming down, or will, as rates stabilizes, prices stabilize?
Yes and no. So usually the commercial real estate market lags the economic markets. About 3 to 4 months is the average cycle. So anything happens in the economic market, you'll see it in the commercial market. So prices will, if you say they are going to level out in rates, prices will continue to drop, but then they'll kind of pick back up.
Okay.
We'll see more activity.
Well, it should happen fairly quick then. This year, from where we're at right now to stabilization to picking back up. So essentially, you need to start planning for it now because it could happen fairly quickly. I mean, we're possibly 1 or 2 rate hikes away, and the markets I've already priced in at this point. Unless you know what, there's always another shoe that could drop, you know, with a geopolitical or higher inflation report. But as of right now, you know, inflation's been significantly coming down since last June. We had a little uptick for January's numbers, but nothing goes up or down in a straight line. So, okay, so 2023, you know, we got through 2022 was quite a change in the markets where it was just a complete seller's market. What kind of market do you see? A buyer's market? Do you see a seller's market? Do you see equilibrium this year?
I think it's going to be a buyer's market. There's going to be a lot of inventory out there, and people are going to be really cautious in investments, which is the reason why I really tell people to, you know, get a broker, get somebody to help you out who understands the market, who knows what will happen, and can help you in a transaction and whatever you want. So I think that's a valuable asset because it's not like in 2020 when everybody was just selling stuff, including, you know, commercial real estate. Like the housing market was going on fire, the commercial real estate was going on fire. Now people are more cautious, and you need to be because, you know, things are expensive. Cost of construction is going up. Cost of commercial insurance is going up as well too, or has been going up.
So in a buyer's market, you know, why, if I can go out and, let's say, get a deal, you know, why would I use a broker instead of just going out trying to find it myself? Given, well, minus the fact that I work 12 hours a day.
What do you say? Expertise you can count on, and
expertise you deserve. Experience you can count on.
So that's the reason why. No, it's just having somebody who's in tune with the market, what's going on, can help anybody make a good decision.
So you're going to negotiate on my behalf then?
Yeah, I can
So
negotiate on your behalf. Yeah, I could also find properties that are not available, you know, to the public, basically.
So off-market properties, negotiations that maybe I have time to do, maybe I don't have time to do, but where real value is your experience and your expertise.
Correct.
Right?
Correct.
You know, a lot of people think. I look at some of my real estate investor clients, and the dynamics have changed so much. Where they had the seller had a massive upper hand. That was a lot of my clients were selling a lot of properties, didn't need anybody involved in it. You know, the buyers all had cash. We're just going through a different environment now, and people need to understand that the markets have shifted significantly, and the dynamics have changed. So I want to use you. So what? All right, Michael, I come to you. I'm like, hey, Michael, Mr. Monteclaro, I want to buy a commercial real estate property. I want to generate cash flow right now, and I think generating cash flow would be good for what's going on in the markets right now. Seems like the more conservative play, and I'm going to get into you with about the different types of commercial real estate investments that I could invest in. But I tell you that I'm going to say, hey, Michael, I want cash flow generating commercial property, and I'm going to put the minimal down. I'm looking for something that's like $1 million. What's the process? Take me through the process of, I just found you. I need some assistance finding that. I gave you some of my metrics that I'm looking for. I'm, I guess, flexible with the type, whether that's office space, industrial, multi-units.
Just as long as it's an investment, basically.
As long as it's investment. I need to do something with this cash. It's sitting in the bank. I'm losing 6.8% year over year due to inflation.
Yeah.
What do you do then?
Well, and I'll go through my questions, like, what's your timeline?
I want to do it 4 months.
4 months.
4
okay.
months.
4 months is, yeah, we could find something in 4 months, right? Where do you want to be located?
In the Tampa Bay area. Yeah. Okay. No geographical restrictions around the area. It could be waterfront property. It could be mainland. I just want some drivable, where I could drive to my commercial piece of property and check it, see how things are going. Maybe I hire a third party, a management team, but maybe I don't. Maybe I want the flexibility to it, so I want it to be drivable. Okay, so what do you do then?
Well, you've actually answered the majority of the questions, because what I ask is, where do you want to be located? What's your timeline? How much do you want to spend? But I do want to know, how much of return do you want? Because that's an important aspect, because different properties spit out different returns once stabilized.
Ooh, okay, now can you give me like a expectation, like range for right here? So let me give you an example. Stock market, we buy bonds, depending on where interest rates are. Let's say we went back pre-pandemic, I'm expecting to make 4 or 5%, maybe 3 to 5%. Stocks, 7 to 10% return. Do you have like parameters like that, expectations? Do you want to, is office space a little more risky? Is multifamily units a little more risky? What kind of returns do you get with each like subcategory?
Well, it all depends. For example, if you have a Walgreens, is what we call a coupon clipper, where you're just sitting in and collecting cash. I say that because it's basically a triple net, meaning it's net, net, net. So the tenant will pay for all the expenses, overhead, insurance, taxes, and all you're doing is collecting the rent and making profit off that. You are not paying any of the expenses for the building and whatnot, so it's all just netted to you. That's why we call it triple net. That product you would see a return about maybe 5 or 6% on average, maybe a little bit lower, stabilized. I'm seeing maybe sometimes 4%.
It's lower, okay.
Yeah.
It's safer.
Yeah, safer, but yeah, so it all depends. And then industrial, if you have a long-term tenant, like if you have a warehouse that's 1 million square feet and Amazon's in there, but actually they'll probably own it, not you.
Yeah.
But no, if you have like an industrial warehouse and you're renting it out,
Run it to Ford.
Yeah.
They can build their. I'm sure they buy the whole thing too. So
Yeah. They just buy the world. They're buying everything right now.
Yes.
But yeah, if you have a warehouse and you're renting it out, you can see a return of 6%. We're seeing. Multifamily is the same too. We're looking at 6 or 7% for a multifamily, stabilized. So it all depends on the product, and what you want to get yourself into. So for me, I would definitely recommend that you look at what really excites you.
Okay. All right. I like that. Okay. So either, I can make money. It depends how much risk I'm willing to take. So safer bets, obviously, renting out to a big name, maybe multifamily, at a riskier location, or a growing location, or it depends what type of demographic that you want in the units. Okay. But what excites me? What would excite me is probably building the foundation from bottom up.
So you probably get raw land, basically.
Yeah.
And that's where I could help you too, because I could assess what could be built to the land. There's a whole process of land development, and what municipalities can allow for. And as a realtor, I can help you develop any kind of thing as long as it's within the means of the municipality if they allow it, you know, on that piece of property. So yeah, but you know, it's more involved, I would say, because there's more expenses. You're talking about the logistics of supplies and, you know, building the stuff, and you have the architect and to go through permitting. So it's we're looking at maybe 18 months from purchase of the land to, you know, start of project.
To completion. Okay. So
No, the completion probably maybe 21 months.
okay.
2 years.
Okay. So nearly 2 years to fully completion, and then I can do whatever my means at that point.
Correct.
Okay. What do you really specialize in though? So
I really specialize in seller representation.
Okay,
I help
alright.
sell investment properties. You know, one of my things is looking at what the property can produce in terms of return for somebody. And my thing is just to really, what do you call it? There's a word for that, like maximize the value for
Okay.
for the seller. Yes.
So based on your experience and your expertise, because you've helped sell so many properties, you know what sells, right? You know how to negotiate it with the potential buyer and get me the highest price.
Highest price.
Okay.
Highest price. Yes.
And Klein and Hutchin, what do they give you? What do they provide you?
The firm gives me a plethora of tools. So one of the things they give me is the experience. You know, Klein & Hutchinson has been around for close to 40 years, more than that maybe.
Yeah, I've seen some of
Yeah.
their locations.
They've developed this county, really helped develop this county over the years. So experience is one, and the other thing is that they provide us with a software platform that we use, which gives us a lot of intel on properties. So I can find out who owns a property, you know,
On and off the market too?
yeah, off market. I can also find out what the current, say for example, cap rate is. What is the return in a submarket or in a specialized market, like Dunedin, for example, or in Clearwater? What's the average cap rate return in that space? What are the vacancies in, you know, in an area in Dunedin? What are the vacancies there? So
So you could tell me specific locations what I can expect to get return. And would you explain, I know I get this, a lot of people don't know. What's a cap rate?
a cap rate, in essence, is basically your income minus your expenses, which gives you an NOI. And the NOI is actually the net profits that go into your pocket. And the cap rate is the percentage of the NOI to the asking sell price.
Okay.
So if, for example, a property wants to, an owner wants to sell a property for $1 million and it's bringing in, say, 10,000 or no, not $1 million. Yeah, $1 million and it's bringing in, say, $100,000. The cap rate will be 10%. So that would be the return. So it's predicated on the asking price.
So the higher the cap rate, the higher the return?
No, the higher the cap rate, the riskier it is.
That's what, okay.
Yeah.
People get that misconception all the time. The higher, the lower.
The lower the cap rate, the more secure it is, but yet your return is not as
So the Starbucks, the Walgreens,
Walgreens.
low cap rate.
So you're looking at 5%,
Yep.
maybe
Yep.
4%. But then again, it's on a long-term lease, so we're looking at 10, 20
I
years.
know it's consistent cash flow, I'm gonna get it.
yes.
But if I want the development of multifamily units, we're looking at a higher cap rate with a higher risk.
Yeah, I would say
Or
maybe.
fixer upper maybe, how about that instead? Instead of going to development's kind of a different
Yeah, that's a different animal.
dynamic altogether because you have the building prices, zoning, timeline, just fixing up multifamily. Well, I appreciate you clarifying that for our audience here. And I guess the last thing that I would leave it is, I know you said at the beginning that we're in a possible recession right now, and as a potential buyer or seller, I guess, if I'm a seller, I think, oh man, I already probably missed the boat. Or if I'm a buyer, why am I waiting? Why wouldn't I just act now and either sell my commercial real estate property or buy one?
In commercial real estate, in real estate in general, the best time to buy or sell is now, because market's going to change, whether you like it or not. So, we don't know what the future's going to hold. Markets could go down more, and they're predicted to go down a little bit more. But if you sell now, you can still get the money for it. You can still make a profit, so to say. For buyers, same true. The time is now to buy. So there's a lot of things that we have to take into consideration, but now is the time to buy or sell. Yeah.
So you don't really know which way the market's going to turn for sure. So if you wait, you're always waiting for infinity.
Infinity, right.
You just wait. Oh my gosh, I think the market's going to do this. I think the market's going to do that.
So a lot of investors are like that right now. I deal with a lot of investors, and they're all sitting on the sidelines. A lot of cash on the sidelines, waiting to see what the market's going to do.
A lot of time they miss the boat.
And they miss the boat, right?
Yeah.
So time is now. Got to move on it.
Right.
So.
Right. Well, hey, thank you very much for joining us, Michael. Tune in next time on Your Investment Advisor. Expertise you deserve, experience you can count on.
Thanks for having me, Jake.
Thank you.